So AMC ended down a little bit on the day. I'm sure people remember that I was short last time I was on here a couple weeks ago. I continue to be short. Honestly, it hasn't gone anywhere since I shorted it. You can see the price action here has just been sideways. We saw Fast and Furious 9 come out over the weekend. AMC came out and said, hey, we had an awesome, record, or not a record, but for the pandemic period, a record showing at the box office. So you did see it pop yesterday. Today, it gave back some of that gain. The one thing you want to keep an eye on here, too, is that the reason this is supported, you can see the 20 moving averages under price. For those of you that are watching this, if price gets below this 20 moving average and closes, let's say a daily close, then AMC is very vulnerable to further downside. And again, I think everyone kind of, you have two camps, people that are super into AMC and potentially, the changes and the meme players. And then for me, I'm in the other camp that's saying, the valuation, while AMC is an awesome brand, it's just hard for my head to get around the crazy valuation here, where it's, one of the biggest companies. It is the biggest company in the Russell at this point, and so forth.
As an investor, suppose I were to ask you now, judging from an investor's perspective, suppose this squeeze never happened. Suppose AMC was never a meme stock in 2021, so to speak. If you were to choose between AMC and Netflix, what would you go with?
Oh, that's so Netflix for sure. I would have to be in the camp of Netflix, because Netflix again has a business that will survive. The streaming wars, right? They're right at the forefront there. Netflix has actually had a recent run up to the upside. I still think it has more short-term upside to this gap fill right here. But yeah, I would definitely go with the Netflix. Netflix proven with the streaming side of things. And AMC, again, isn't a streaming service right now. I don't think that they could be, because most of the streaming, like the movies that are coming out are going to Disney first, or at the same time as going to AMC. So I'd be in the Netflix camp here in terms of investing. The thing is, you have to just continue to stay diversified. And this is going on the assumption that you have, a certain amount of wealth. Well, let's just call it $1 million or even $100,000. You'd never want to put all your money in the stock market on the long side. You'd never want to go all short. You'd never be all in on Bitcoin. Those were mistakes I made early in my career, where I would get so hyped up about some asset, right? And I'd go all in. And you know what would happen? I'd get my butt handed to me over and over again. And ultimately, as my net worth grew, I said, listen, I can't risk that. It's too much money. So you got to diversify. So having said that, I think the metals, gold and silver, and some of these other metals you want to be involved with. But again, keep that to 10% of your investment. It's hard for me to say go long Bitcoin here, because even though I do believe in the long-term story of Bitcoin, I do think there's another leg lower first. But, same thing goes with stocks. There are opportunities in stocks, right? So last time I was on, I was talking about Chinese stocks, how I liked some of them. I liked Viacom, right? Yeah. So even though I'm net short the S&P and the NASDAQ, I have certain stocks here that I really like. Like you can see just over the last week and a half, 2 weeks since I was on, you've had Baidu rally up from $184 to 207 here. You've had Alibaba, which are best of breed Chinese names. I mean, look at this move to the upside here. Beautiful move. And even Viacom, you can see it had a nice push up, even though it pulled back today. So the key is that, keep yourself diversified. There's a certain amount of stocks you can find that have gotten crushed already. Those to me are safer, because if a market did correct, I think they wouldn't be hit as hard. And then I think you diversify with being short a little bit in certain areas, gold, silver. And again, if crypto corrects, you've got to have crypto as part of your portfolio as well. Just make sure you're following your own risk tolerance, right? So there are certain people that are older towards retirement. You want to be obviously safer with those investments. If you're somewhere my age, I'm 40 years old, what you want to do is you probably keep about 50% in stocks, and that could be long or short, obviously choosing and swing trading the right stocks. And then I'd look to do, at the right opportunity, at least 10% in crypto, 10% in gold or silver. And then that leaves you about 30% to play around with. Keep 10% in cash at all times, because you never know when a good opportunity will come up. And then I'd look to, just spread the others around, whether it's in bonds or in other things. Sometimes you can do some currency pairs, you can do some other things out there as well that'll be good opportunities. But I think 50% in the market, the stock market, and then diversify out in other things. I mean, again, you can look at commodities like oil maybe. Okay. I like oil on the short side personally at this point, but definitely those would be the allocation area that for me at my age that I'm looking to do.
Gareth, let's talk about gold. Can we fall below $1,700 again?
So the answer is yes in the short term, right? I mean, we're not that far away at this point. I think last time I was on, we had just started to fall off a cliff here on the GLD, and I was just starting to accumulate. So I've got about 4% of my swing trade portfolio in gold right now. I'd like to get it up as high as 10%. So again, the way I operate, folks, and this is just a quick little lesson, is that I never, and this is something I learned from my early career too, right? So in the early days, I would say, oh, this is the best entry level ever. I'm going to go all in, buy whatever I want to buy, go all in. And I'd lose half the time. I mean, it's just, you have to be humble enough to understand that the markets are superior and they'll do whatever they want, whenever they want. So the way I do it is I leg in, where I put in, in this case, 2% was my first buy. My next buy was another 2% of my portfolio, and I'll look to accumulate that. So long term, gold is kind of one of those no-brainer investments to me. It's looking at the facts, right? You have the Federal Reserve printing. You have the government spending. The inflation, whether it's going to be transitory in the short run or not, is going to continue, and likely at a higher pace than the Federal Reserve will want, whether it's 3% or 4%. You want to have that diversification out of the dollars, at least with a portion of your portfolio. So the bottom line is, look to continue to accumulate gold. Like my next buy level on the GLD is around 163. There's a gap fill, and you can see this pivot right here. Let me zoom in. So pivot here, that's support, then a nice little gap fill right before the breakout. That would be another add level, and then here would be another point, and then basically I'd even add more down here. So that's where I'm at in terms of my investments on gold. I continue to look to accumulate. I have some GDX. I have some Newmont mining in my portfolio at these levels. And I still think that at some point you're going to see a reversal, and gold should hit 20, possibly 2,100 by year end. Well, so let's be clear. When you get an all-out panic like during COVID, you saw gold initially sell off, right? But then before you knew it, it rebounded and made new highs. So there are going to be periods in this market, and this is what I think will drive Bitcoin to 20,000 or sub 20,000, will be that period of deleveraging. There's so much leverage in the market where people are margined to the hilt. Look at the Archegos Capital. I mean, this hedge fund trader was like leveraging 100 times. That's just an example of what's going on in the general market with leverage right now. So there will be a point where fear strikes again. I don't know the catalyst for it, but there will be a point where you have a taper tantrum where the markets drop 20% really quickly or something like that. It could be China. It could be the Delta variant becoming, the vaccine doesn't work against it. Who knows? Yeah. But when that happens, you'll see gold initially sell off, and then people will say, okay, let's rotate into gold, and that's where you'll see that move to the upside.